as we go into the last 3.5 trading months of the year, the last quarter of the year, what can we do to continue the streak of success for 2024? I mean, after all, this has been a very bullish year. If you take a look at the S&P since January, it's hard to look at this overall chart and say, yeah, there's been periods of volatility, but overall, the uptrends have dominated what we've seen. So how do we keep the account growth going? And what are the things that, if we can follow certain tenets, are going to help us? Well, the first thing is, what are we trading? What's actually being traded? And a lot of what we're continuing to focus on are those relative outperforming sectors, whether that be staples, whether that be utilities, whether that be consumer discretionary. Communications have been up there. Healthcare is up there. Are we focusing on the sectors that are continuing to move higher? So what is being traded? The second part of that is, what is the risk to the account? Now, as a general rule, risk to the account in a trend is usually far less, because the behavior in a trend is usually far more, I don't want to use the word predictable, but it tends to have better follow through, right? So what's the risk to the account? In other words, if you're wrong, if a trade is wrong, if I'm wrong, what is the loss in the account? I'll tell you this, a lot of traders operate with being okay risking 7, 8, 9% of their account per trade. Realize 5 losing trades will bring you to risk of ruin. That's going to be down 50% of your account. If you're risking 7 to 10%, you're going to be flirting with being down 35 to 50% of the account. So what are you risking of your account per trade? Now, let's talk about trends and reward, and let's talk about a couple open trades. Because, you'll see down here I have, proof is in the trades themselves. So everything I'm talking about is mapping to what we've been doing all year long. I'm going to share with you what we do in the Sector Secrets Mastery and what I put out in terms of a daily recap. So this is today's daily recap. Got a couple things I think I've got to update here, but this is pretty much what's going to go out for today, September 10. We had a day trade. In fact, we did this twice. It was the QQQ. We pretty much did this twice. Bought the September 455s. Why? What are we trading? QQQ was the relative outperformer. The NASDAQ was the relative outperformer today. So it doesn't matter if we're doing day trades or if we're doing swing trades, we're always looking for that relative outperformer. And in this case, it was the 5-minute time frame where we were looking for a today trade, a day trade. And this was earlier this morning, so squeeze in about 9:30, and that's all we were looking to take advantage of, right? And that was done. That first trade this morning was done by 10 o'clock. I mean, that was really just something we did during the clearing. All right, so the day trading is done. Then what's next? We talked about risk to the account. Well, part of risk is cost. Now take a look at the cost of the trades on our setup sheet here. These are the things that we're trading right now. So take a look at the cost of what we're trading. $2, $3.55, $3.40, just over $4, $2.50, $1.55, $3.70, right? This, and even the day trade was $2.15. So part of risk is associated with cost, right? So what is the risk to the account? Your first step is, what are you trading in terms of the cost of the option? All right, then that goes to, what kind of reward could we expect? Well, my trade expectancy and my expectation for follow through is going to be far higher in a trend. And this is something we talk about all the time in the Sector Secrets Mastery, which is, are we exhausting all the different opportunities within the context of a trend, right? Whether that's the trend in gold, which is started to wobble a little bit, but whether that's the overall trend in gold, whether that's the overall trend in Coke, right? Whether that's been the strength in IBM. Do you see a common trait here? You might say, wait a minute, Rog, I thought September was supposed to be the end of the world. No, that was August apparently, and so far both of those have been called off. We're only a third of the way through September. It's only the 10th, but so far there are places that are punching up to higher highs, aren't they? Remember, fear in one place is an outflow. Outflow from one place is usually going to go somewhere else. So one symbol's or sector's outflow is another symbol's inflow because money doesn't go under the mattress. So we think about where that money might be flowing, and that's what brings us back to the trend. And when we have trends, again, we have a better chance of follow through. So let's go back to the open trades that we have. These are September's trades. Okay, there's actually a couple more, but this is pretty much where we are in the 10th. So gold continues to move higher. I've got September 20 expiration, and I might run out of time before I reach a new high or get above 25.73.5. But as long as we're pushing up against these Darvas resistance levels or even the gold zone of the daily price movement range, this will continue to be an appreciation of the value, right? Account growth of a $3.40 GLD option that still has 10 days, at this point 9 days to expiration. And right now, that GLD 229 call is worth $4.90, right? So that's what we mean about account growth. And you'll see I have a couple examples here where I've taken, where we are and I broke it down per contract. Every one of these numbers is just per contract. And we also have to think in that per contract way, because then the multiplier is how many of these options can you buy? So this is our book right now. We still have some traders managing the long position in TLT and the long position in XLY. And is it going to surprise anybody to see, oh, these are trends, right? So if we go into September thinking, Rog, we know the seasonal is so awful, and we take our eye off the ball in terms of those trends that are continuing up and in a pretty healthy way, then we're going to miss out on the opportunity. But what about weakness? Right? A lot of traders are wondering, hey, where is the weakness? I'll dive into this a whole lot more throughout the week, but keep an eye on things like semiconductors. If you're looking at wanting to get puts, if you're looking at September as being a bearish month and you want to be in the best examples of weakness, keep an eye on energy, oil and gas explorers, oil services. These are absolute beautiful dumpster fires to the downside, right? So if you're looking for weakness in September, look at those four sectors. If you're looking for strength, stick with what we've been doing in the mastery here and focusing again on account growth. Every one of these is above where we bought it. We've scaled out, we're managing risk, and we're just putting capital into our account as the trend continues, right? So really in a lot of ways, the same trend we want on our chart, I prefer an uptrend, is the same trend we want in our P&L. Focus on that trend and the account growth is a whole lot easier to come by. Hey traders, Raghi from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.